Nestle started in Malaysia on 1912 as the Anglo-Swiss Condensed Milk Company. Today, they produce over 500 halal-certified products like Milo and Maggi, employing 4,600 and more people across multiple plants. Now, for quality and community engagement, Nestle continues to be a trusted name in Malaysia food industry. Founded in 1974 by Tan Sri Dr. Jeffrey Che, Sunway Berhad is a leading Malaysian corporation based in Bandar Sunway, Selangor. It spans property development, construction, education like Sunway University and Sunway College, healthcare, retail and hospitality such as Sunway Resort Hotel and Spa. Renowned for sustainable developments like Sunway City, Sunway is committed to environmental conservation and community development through the Jeffrey Che Foundation, aiming to set the standard for Asia in sustainable innovation and economic growth. So let's move to the next is content of MFRS 116. The first one is recognition. Nestle Malaysia used MFRS 116 for property, plant and equipment. Asset must provide future economic benefit with cost allocated over their useful life. Next, measurement. The company includes all initial PPEs, costs such as purchase price, import duties, tax and costs to bring the asset to working condition. Lastly, presentation and disclosure of MFRS 116 require disclosing PPE measurement basis and carrying amount at the start and end of the reporting period, categorized by land, buildings, machinery and equipment.
Next is contact MFRS 114. First is recognition. Sunway Berhad use MFRS 114 standard to recognize investment property with potential future economic benefit and reliable cost measurement, ensuring accurate and consistent record keeping. Next is measurement. Sunway Berhad use fair value assessment to value its investment property, ensuring they are valued at the higher use and complying with MFRS 114. Lastly, presentation and disclosure. Sunway Berhad financial statement detail investment properties. Their fair value determination, external value involvement, profit and loss recognition, and reconciliation, ensuring transparency and understanding of their financial impact.
Differences between MFRS and MPERS. For the scope, MFRS is for publicly listed financial institutions and large private entities, while MPERS it is for private entities, small and medium-sized enterprise without public accountability. In complexity, MFRS is more complex and comprehensive, suitable for larger and more complex entities. MPERS is simplified to reduce the reporting burden on smaller entities. In recognition and measurement, MFRS is detailed and comprehensive, often using fair value measurement and complex accounting treatments, while MPERS is simplified, use historical cost-based measurement and fewer options for fair value accounting. For disclosure requirement, MFRS requires comprehensive disclosures about financial status, operation, and cash flow, while MPERS is less stringent disclosure requirement due to the private nature of the entities. In implementation, MFRS is implemented by larger, complex entities with significant resources, while MPERS is implemented by smaller entities with fewer resources and less accounting expertise.
Let's start with an introduction of the company. TechEQ Solution Ltd is a global lender in innovation and sustainability, specialized in renting and selling advanced machinery and equipment. We are committed to financial integrity, ethical practice, and also environmental stewardship. Let's talk about the recognition and measurement of our PPE. First, equipment is recognized upon delivery and installation by providing future economic benefit and also including costs like purchase price, transportation, and installation. Similarly, machinery is recognized upon delivery and installation with costs including purchase price, transportation, and installation. For buildings, recognition is based on rental income, appreciation, or business enhancement with cost of including purchase price and also construction. As you can see here, there are some calculations to determine wanted cost. The total capitalized cost is 2,238,400 for initial measurement for machinery purchase or cash. Next, the total capitalized cost for subcontracted PPE, specifically a building, is RM 3,450,000, while the cost for deferred payment of PPE, specifically machinery, is RM 7,650,000. Moving on to the revaluation model and cost model. For machinery, we use the revaluation model with revaluation in 2016, 18, 20, 22, and 23. Adjustments are made to the carrying amount and depreciation. For buildings, we use the cost model maintaining historical cost and basing depreciation on the asset cost. Now, let's look at depreciation calculations. For machinery, the initial cost is RM 2,238,000 using the straight line method over 20 years. Adjusted revaluations. For buildings, the initial cost is RM 3,450,000 using the straight line method over 15 years.
Introduction of the company MFRS 114. First, in name of public company, Maya Estate Berhad. Public company specializing in leading real estate company involved in the acquisition, development, and management of commercial and residential property. Location at Ipoh, Perak, and started date is 21 October 2013. Next is investment property. For the first investment property is Maya Office Building. Location at Jalan Sultan Iskandar, Ipoh, Perak. Purpose is to lease to corporate tenant. Acquisition date is 1st January 2014 and acquisition cost is 30 million. Second is Maya Retail Space. Location at Ipoh, Perak, Jalan Sultan Abdul Jalil, Ipoh, Perak. Purpose is lease to retail business. Acquisition date is 1st July 2019 and acquisition cost is 150 million.
In criteria for recognition, MFRS 140, ownership or leasehold interest. Maya Estate Berhad owns or holds leasehold interest in the investment properties. Management intent. Maya Estate Berhad's intent is to earn rentals and achieve capital appreciation. Accounting treatment. The investment properties are accounted for under the cost model or the fair value model, depending on the accounting policy adopted by Maya Estate Berhad.
Next initial measurement for IP MFRS 114. So here the calculation of initial measurement and total cost for Maya Office Building is 30 million ringgit and for Maya Retail Space 150 million ringgit.
From the calculation, this is the revaluation surplus and deficit, the fair value of the year and the carrying value on 31 December 2024 after IP is transferred to PPE amount 37,050,000 ringgit. The property is reclassified from IP to PPE on 1 January 2024. The initial cost of PPE is measured at fair value of IP of 39 million ringgit as at date of transfer on 1 January 2024. Changes in fair value of 3 million ringgit is charged to profit or loss. Depreciation of 1,950,000 ringgit is charged as expense in profit or loss.